everyone. I hope you all are well. Sure. Our today's topic is Advanced Tax Deduction at Source, that is TDS, and Introduction to Tax Collection at Source, that is TCS. Now, anyone knows about what is tax deduction at source, what is tax collection at source, and what is advanced tax? Anyone have any idea? Just let me know. See, for running of government needs regular payment, right? So what happened, my dear friend? Government will collect tax. See, generally, what will you understand is, say for example, if you are filing your return of income, at the time of filing, that is after the end of assessment year, after end of previous year, that is in assessment year, you will determine your final tax liability. Everyone agree with this? In assessment year, you will determine your final tax liability and you will pay tax at the time of filing return of income. But government needs regular payment, right? So during previous year itself, government will collect taxes by way of tax deduction at source, tax collection at source, and by way of payment of advance tax, right? So the section 191 deal with the direct payment of taxes. See, in case of TDS, you have to remember the two terms, payer and pay, right? Yani, pay means recipient. So what happened? Say for example, I am giving a professional service to XYZ firm and I am raising a bill of 50,000 rupees. So what happened? There is a section called 194J. We will discuss that. I will issue an invoice of rupees 50,000 to XYZ firm, right? So my dear friend, XYZ firm will deduct my TDS at the rate of 10%. So what happened here? XYZ firm will pay 45,000 to me and 5,000 to government on my behalf. That is called TDS. Clear, everyone? Now, suppose in case of on any income, the TDS is not applicable. The payer is not deducted the TDS. Then the assessee, that is the payee itself, have to pay the tax on that income by way of self-assessment tax or by way of advance tax. That means if I am paying my tax directly to the government, then that is called as self-assessment tax. And if I am paying such tax during previous year, then it is called as advance tax. Okay, everyone clear what is TDS, what is advance tax, and what is self-assessment tax? Just let me know. Yes or no, everyone? There are many sections under which on different type of income you have to deduct tax at different rates. So we will discuss the different sections of this chapter under which we will learn on which kind of income, what will be the rate of TDS. The TDS is required to be deducted by the payer only. Remember, my dear friend, who will deduct TDS? Payer, right? So let us discuss the first section, that is section 192, TDS on salary. Now, in case of salary, who is payer? In case of salary, who is payer? Everyone, who is payer? Employer, right? And who is paying? Employee. So, while the employer making payment of salary to employee, when the employer makes payment of salary to employee, the employer will deduct tax from salary. Now, what will be the rate of TDS in case of salary? See, different person have different salaries. Say, for example, Mr. X salary is rupees 5 lakh rupees. Mr. Y salary is 15 lakh rupees. Mr. Z salary is 50 lakh rupees, say, for example. So, here the rate of TDS is average rate. My dear friend, if you are having a salary income, then you will pay tax as per slab rate. So here the rate of TDS is average rate. Now how will you find the average rate? Say for example, Mr. X is having salary income of rupees 10 lakh, net taxable salary. He does not have any other income. So his net taxable salary income is 10 lakh rupees. Now what will be the tax amount, basic tax amount? Just I am asking for basic tax amount without cess. What is the basic tax liability of Mr. X? Everyone calculate as per the old scheme, tax on 10 lakh rupees and just let me know quickly. Chalo. It's 1,12,500. So this 10 lakh rupees is paid by employer every month, right? And the tax on such salary is 1,12,500 for the year. So what employer will do? This is for the year TDS amount, right? So here 1,12,500 is for 12 months. So what is for 1 month? Everyone, 1,12,500 divided by 12 months. What will be your answer? Shall we just quickly do this? 1,12,500 is for the year's tax. Yeah, right? Tax for the year is 1,12,500. So what is the tax for 1 month? It's 9,375. So if your employer deduct tax of rupees 9,375, 9,375 rupees from your salary every month. That is the average rate. Otherwise, what you can do is percentage. How will you find the percentage? 1,12,500 divided by 10. And each month salary you will multiply with the percentage. Clear, everyone? So 9,375 is the tax per month deducted by the employer from the salary of employee. Now, at what time the employer will deduct tax? At the time of payment. Whenever employer make the payment of this salary to Mr. X, he will deduct tax rupees 9,375 every month. Clear? Sure. This section casts an response obligation on every person responsible for paying any income chargeable to tax under the head salary to deduct income tax on the amount payable. Now, manner of deduction of tax. So what will be the rate of tax? That is the average rate of income tax computed on the basis of rate in force for the relevant financial year. Say, for example, every year in finance, like the slab rate changes. So, whatever the slab rate apply for the particular previous year, you have to take that slab rate for calculation of average rate. Therefore, the liability to deduct tax at source in case of salaries arise only at the time of payment. What is the time of deduction of tax in case of salary? At the time of payment. Say, for example, you all learned the new scheme, that is 115 BAC. So if your employee is obtaining for the new scheme, that is 115 BAC, new regime of taxation, then what happened? Your employee should, it is the responsibility of employee to intimate to the employer that he will obtain for concessional rate of taxation under section 115 BAC. If your employee make declaration to the employer will calculate the tax liability according to new regime and calculate the tax as per the new regime. Clear? Suppose your employee does not make an intimation or does not inform you for the opting of new scheme, then what happens? Then you will calculate his tax liability as per the old scheme, that is as per normal slab rate, not at concessional rate of taxation. Clear, everyone? Average rate of income tax means rate arrived at by dividing the amount of income tax calculated on total income by such total income. Yani 1,12,500 divided by 10 lakh salary. That is the average rate. Now you will learn the topic of non-monetary perquisite in the chapter of salary. So employer has an option to pay tax on non-monetary perquisites, and he will not recover that tax from his or her employee. Okay. So in that case also, if your employer paying tax on non-monetary perquisite on your behalf, then also the rate will be the aggregate rate only, average rate. The concept of payment of tax on non-monetary perquisite has been provided in section 192 1A and 1B. This section provides that employer may pay this tax at his option in lieu of deduction of tax at source from salary payable to employee. Now, what will be the rate of tax on non-monetary perquisite? It is same, that is the average rate applicable to salary income of the employee, and payment of tax will have to be made every month along with tax deducted at source on monetary payment of salary or allowance. Now, in case of eligible startup, you will learn the definition. Already you know the definition of eligible startup that mentioned in 80 IAC. So if you are an employer and you are in the your business is an eligible startup, okay, responsible for paying any income to assessee by way of perquisite being any specified security or sweat equity share allotted or transfer free of cost. No, you have to consider all the salary. What the definition of salary include everything: basic salary, perquisite, allowance, and bonus, commission, etc. So you have to consider all things. Clear? Yanishri. Sure. So in case of eligible startup, if an employer issues sweat equity shares to his employee at concessional rate or free of cost. So you already know the concept of sweat equity share in salary chapter. So what happens? Say for example, the market price of shares is 100, and if your employer issued this share to you at, say for example, 70 rupees. So 30% is perquisite in the hand of employee, right? And this 30 rupees is added to your income as perquisite, and you have to pay tax on this income. Now, in case of eligible startup, if your employer issues shares to you and this perquisite is taxable, so the employer will deduct tax on this perquisite within 14 days, from the earliest of the following. That is, after expiry of 48 months from the end of relevant assessment year. It is only for startups. See, no, in norm, other than startup, on this 30 rupees, you have to pay tax for the previous year in which the shares are issued. But in case of eligible startup, you have to pay tax. Yani you have to deduct tax as an employer. Earliest of 40, after expiry of 48 months from the end of relevant assessment year. So if you are issuing share in assessment year 23-24, so 48 months, yani 24-25, 25-26, 26-27, 27-28. So after assessment year 27-28, you will have to deduct tax on that perquisite. Or from the date of sale of such specified security or sweat equity share by the assessee. Whenever your employee sells a security, that date, or from the date of assessee ceasing to be employee of the employer who allotted such share. If your employee left the job, then the date of the employee left the job. Whichever is earlier, you as an employer have to deduct tax on that perquisite. It is only in case of eligible startup. Other than eligible startup, in case of sweat equity or issued for concessional rate or free of cost, you have to deduct tax at source in the year in which the equity shares are issued. Is that clear, everyone? Yes or no? Now the next is, if, say for example, if a person is working with two employees, Mr. X is employed with ABC Limited and PQR Limited. Now what happened, my dear friend? Here, Mr. X has to inform PQR Limited that he is working with ABC Limited, and Mr. X has to inform ABC Limited that he is also an employee of PQR Limited. Why? Say for example, here the salary is 7 lakh. Here the salary is 3 lakh. So if ABC Limited does not have an idea that the Mr. X is working with PQR Limited, then ABC Limited will not deduct any tax. Why? Because the salary is only 3 lakh rupees. And if your net income is 5 lakh, then you are eligible for rebate under Section 87E. Right, my dear friend? And in case of PQR Limited, the PQR Limited will deduct tax only on 7 lakh rupees. So in this case, Mr. X has to inform every employer that he is working with more than one employee, and what will be the amount of tax and how much TDS deducted by other employer. So in this case, Mr. X has to inform PQR Limited that the salary from ABC Limited is 3 lakh rupees and ABC Limited deducts so and so of TDS. Same, Mr. X has to inform ABC Limited that his salary from PQR Limited is so and so, and PQR Limited is deducted tax so and so amount. And say, for example, during the year an employee changed his job, then also he has to inform his subsequent employer about his previous salary and the amount of tax already deducted by his previous employer. In respect of salary payment to employee of government or to employee of companies, cooperative society, local authorities, universities, institution, association, reduction of tax should be made after allowing relief under 89, where eligible. A taxpayer having salary income in addition to other income chargeable to tax for that financial year may send to employer the following particular of such other income and of any tax deducted under any other provision or loss, if any, under the head income from house property. Say, for example, Mr. X is having taxable salary after deduction, after standard deduction and everything, 1 lakh. He is having FD interest, 1 lakh. And he is paying interest on housing loan for self-occupied house property, say, for example, 50,000. So his net income is 10 lakh 50,000 taxable income. Yes or no? 10 lakh salary, 1 lakh FD, 50,000 house property loss is set off against salary income. So his income is 10 lakh 50,000. Yes or no, everyone? Now, if Mr. X wants that his employer deduct the entire tax on entire income, then he has to inform to his employer that his other income is 1 lakh rupees and he is having loss from house property 50,000 rupees. So what happened here? His employer, Mr. X employer, will deduct tax on 10 lakh 50,000. So at the year end, whenever Mr. X filing his return of income, he is not required to pay any tax. Why? Because his employer already deducted his tax on his entire income, including income from other sources. So if as an employee, if you want to add your income, other income in your salary, and you want your employer to deduct tax on your entire income, then you have to inform to your employer about your other sources income. And if is there any loss under the head house property, then you have to inform about the same. It is also provided that except in case where loss from house property has been adjusted against salary income, the tax deductible from salary should not be reduced as a consequence of making the above adjustment. Meaning thereby, if you are having a house property loss, then only the house property loss is adjusted against salary. Statement, furnishing of statement of particular of perquisite or profit in lieu of salary by employer to employee. Here, subsection 2C provides that employer shall furnish to employee a statement in Form 12BA, giving correct and complete particular of perquisite or profit in lieu of salary provided to him and value thereof. That is, the employer is required to give breakup of salary. Say, for example, your CTC is 12 lakh rupees, but what will be the breakup of that 12 lakh? What will be the amount of HRA? What will be the amount of bonus? What will be the amount of any other perquisite? Say, for example, motor vehicle perquisite, yeah, any other perquisite. So your employer have to give the breakup of salary in form number 12A. This requirement is applicable only where the salary paid or payable to an employee exceeds 1,50,000. So if as your employee's salary is 1,50,000, then as an employer, you have to give breakup of salary to him in Form 12BA. For other employee, that means those employees whose salary is less than 1,50,000, the particular perquisite or profit in lieu of salary shall be given in form number 16. Every year, the CBDT issues circular giving detail and direction to all employer for the purpose of deduction of tax from salary payable to employee during the relevant financial year. This instruction should be followed. The CBDT will release an instruction how you have to deduct tax from the salary, how you have to report that to the employee, to the government. So you have to follow the instructions. Requirement to obtain evidence proof particular of claim from the employee by the employer. Say for example, if as an employee I want to claim or I want to set off my house property loss against my salary income, then I have to inform about that loss, that I am paying interest on my self-occupied property. I have to inform this to my employer, right? Otherwise, how I will know that I am paying an interest on my self-occupied property and I am eligible to set off my self-occupied property's loss against 1,50,000 is for the year, and form number 12 PA is the breakup of your salary. That what component is towards HRA, what component is basic salary, what component is dearness allowance. That particular is giving in the form 12B. So I have to inform and I have to give a proof to my employer that I am paying an interest. So in case of house property, if I am paying interest on self-occupied property, then I will provide the interest certificate to my employer that I am paying that amount of interest. So what happen? He will be adjust my house property loss against salary income. Same in case of HRA. If you are paying the rent, then you have to provide the rent receipt, or if the rent amount is more than 1 lakh rupees for the year, then you have to provide the landlord PAN to the employer to prove that you are actually paying rent, so that certain portion of HRA will get exempt and the balance is taxable. So whenever while see the CBDT issue the instructions and circular, you have to follow that. It is a procedural work, not the thing that is apart from the section. So what happened? Your employer will consider that interest, or in case of HRA, if you are paying rent, then you have to provide the details of rent paid by you to your landlord, so that the employer will consider the same and consider the exempt HRA also. Otherwise, what happen? He will fully taxable the HRA. Section 2D casts responsibility on person responsible for paying any income chargeable under the head salary to obtain from the assessee the evidence or proof or particular prescribed claim, whatever claim you want to claim from your salary. Say, for example, you are paying life insurance premium and you want to claim that as deduction under section 80C, then you have to give the proof of payment of LIC to your employer, so that he will reduce the premium paid by you from salary income and considered taxable income after deducting insurance premium paid by you. Under the provision of the Act and prescribed form and manner for the purpose of estimating income of assessee or computing tax deductible under section 192(1). Rule 26C requires furnishing of evidence of following claim by employee to person responsible for making payment under section 192 subsection 1 in form 12BB. In form 12BB, you have to mention this disclosure and you have to submit the proof. For the purpose of estimating his income or computing tax deduction of at source. House rent allowance. So you have to provide evidence of name, address, PAN of landlord where the aggregate rent paid during the previous year is 1 lakh rupees, exceed 1 lakh. So if you are paying rent, the value of rent for the year is more than 1 lakh, then you have to give the details of name, address, PAN of landlord, rent agreement to the employer. Leave travel concession or assistance. Say for example, if you want to claim the exempt leave travel concession, so you have to provide the evidence of expenditure. Deduction of interest under the head income from house property. So name, address, PAN of lender. From which bank you have taken loan, what amount we will pay. So for this, you can give an interest certificate. Deduction under Chapter 6A, that is the AET, CATD. So if you are paying any medical premium, so you have to give that receipt to your employer so that he will consider the same. And after deducting that amount from your salary, he will calculate your tax amount. Evidence of investment expenditure, etc. Clear everyone? Just go through this. After that, we will discuss the new section, that is premature withdrawal from employees' provident fund. Everyone clear? Yes or no? Yes or no, everyone? Priyanka, Alok, Kavita, yes or no? Mohammed, Keith, clear everyone? Sure. Next is premature withdrawal from employee provident fund. Everyone knows about provident fund. In salary chapter, you learn about different types of provident funds. So if you are contributing in recognized provident fund, then the employee's contribution, you can take exemption, you can take deduction under section 80C. Now, if you are withdrawing amount from your provident fund, then what will be the TDS implications is there? Let us discuss that. Under the Employee Provident Fund and Miscellaneous Provision Act 1952, certain specified employer are required to comply with Employee Provident Fund Scheme 1952. However, the employer are also permitted to establish and manage their own private provident fund scheme subject to fulfillment of certain conditions. The Provident Fund established under a scheme framed under EPF and MP Act and all Provident Fund exempted under Section 117 of the said Act and recognized under Income Tax Act are termed as recognized Provident Fund. You already learned this definition in salary chapter. Part A of 4th Schedule to Income Tax Act 1961 contains the provision relating to RPF, that is Recognized Provident Fund. Under existing provision of Rule 8, Part A of 4th Schedule, the withdrawal of accumulated balance by an employee from RPF is exempt from taxation. So if you are withdrawing your amount which fall under Rule 8, then whatever amount you withdraw from your recognized provident fund, it is fully exempt. Now, what is Rule 8? Anyone have any idea about Rule 8? See, in this point, they have provided the basic idea of Rule 8, that is, for the purpose of discouraging premature withdrawal and promoting long-term saving, if an employee make withdrawal before continuous service of 5 years. So here in Rule 8, after continuous service of 5 years, second, ill health, discontinuance of business, cessation of employment. If this 4 is the condition, say for example, you are left your job because of your ill health and now you are not able to work. So in that case, if you withdraw amount from recognized provident fund, that is exempt. So in this 4 case, if you are withdrawing your amount from recognized provident fund, it is exempt and no tax is required to be deducted. Why? Because the income is exempt. There is no tax liability on such income. So the TDS is not required to be deducted. But other than these 4 issues, other than these 4 cases, if you are withdrawing amount from your provident fund, say for example, you are withdrawing your amount from provident fund before 5 years of service, right? So in that case, the withdrawal is taxable and the trustees of the provident fund is required to deduct tax on such withdrawal. For the purpose of discouraging premature withdrawal and promoting long-term saving, if employee make withdrawal before continuous service of 5 years, other than case of, other than is rule 8, termination due to ill health, contraction or discontinuance of business, cessation of employment, etc., and does not opt for transfer of accumulated balance due to new employer, the withdrawal will be subject to Rule 9 of Part A of 4th Schedule provides the manner of computing tax liability of employee in respect of premature withdrawal. In order to ensure collection of tax in respect of premature withdrawal, no, ill health of assessee only, so that he is not able to work, not the family member. In order to ensure collection of tax in respect of premature withdrawal, Rule 10 of Part A of 4th Schedule casts responsibility on trustees. That is, here who will be the payer trustees of Provident Fund. So trustees of Provident Fund is required to deduct tax at the time of payment. What is the time of deduction of tax? It is at the time of payment. Okay. So, if you are withdrawing the amount from recognized provident fund before 5 years of service, then it is treated as unrecognized provident fund for computation of tax liability, and all the implications of unrecognized provident fund is applicable in case of withdrawal. If you are, whenever when at time of contribution it is recognized provident fund and before 5 years you are withdrawing such amount. So what happened? Or say for example after 3 years you are withdrawing the amount. So for 3 years you claim the deduction of employee provident fund, employee's contribution under ATC. Your employer's contribution to recognized provident fund is exempt up to 12%, right? So all work you should do to revise. Your all computation for past 3 years is revised, and it is the treatment will be treated as unrecognized provident fund. So the employer contribution is taxable. Employee's contribution is not eligible for deduction under Section 80C. You have to recalculate your tax liability that is treating the same as unrecognized provident fund, and you have to pay tax on that if you are withdrawing before 5 years of continuous services. The rate of TDS is 10%, and the TDS is required to be deducted at the time of payment. Say, for example, you are withdrawing money from your recognized provident fund before completion of 5 years, and the amount is, say, for example, 5 lakh. So the trustees of Provident Fund deduct TDS 50,000, that is 10% of 5 lakh, and deduction will be done at the time of payment. Non-applicability of TDS under 192A. See, there in different section there is a threshold limit. So say for example, your withdrawal for the year is 50,000, less than 50,000. Your withdrawal for the year is, say for example, I am withdrawing 25,000 from my recognized provident fund account before completion of continuous service of 5 years. Then the trustee is not required to deduct TDS. Why? Because the threshold limit is 50,000. So if your withdrawal is 50,000 or more, then the trustee will deduct TDS. Otherwise, they will not deduct TDS. Say, for example, I am withdrawing 1 lakh rupees, then the TDS is required to be deducted on whole amount. Say, for example, I am withdrawing 1 lakh 20, so the TDS is required to be deducted on whole amount, not the balance amount. See, in pressure, what student will done, they will calculate the TDS on 70,000. That is 1 lakh 20 minus 50 thresholds. It is not the case, everyone. In case of TDS, if the threshold limit, if the amount exceeds the threshold limit, then the TDS is required to be deducted on entire payment and not on the balance amount. Clear, everyone? So if you are withdrawing less than 50, then the TDS is not required to be deducted. If you are withdrawing 50,000 or more, then the TDS is required to be deducted on entire amount at the rate of 10%, and the time of deduction is payment. If the employee have not provided PAN to the trustees of Provident Fund, then trustee will deduct tax at maximum marginal rate. So you have, for 10% deduction, you have to give your PAN to trustees of Provident Fund. Clear, everyone? Yes or no? Yes or no, everyone? So next is section 193. See, in this case, you have to remember all the section, name of section, everything. Rate of TDS, time of deduction of TDS, threshold limit. You have to remember everything. Interest on security, section 193. What is the securities? Bond, debenture, etc. Right? So in this case, because the balance limit is still with the trustees, you are withdrawing some amount, not the entire amount. If you withdraw only 40,000, then the TDS is not required to be deducted. Now, if a company is paying interest, yes, yes, the maximum marginal rate is correct. 10% on entire withdrawal, yes. If the withdrawal is more than 50,000, you can do that. Yes, you can withdraw 50,000 in March and again 50,000 in April. Less than 50. Clear, everyone? No. No, Anand. If the withdrawal is 50,000 or more, then the T-tax is required to be deducted on entire amount. But if the withdrawal is less than 50,000, then the tax is not required to be deducted. Clear? Shall we move towards next section? Yes or no? Withdrawal is for the year. Maximum marginal rate is 30% plus 37% surcharge plus 4% cess. Clear, Sri Lakshmi? Clear, Uday? Yes or no? Yes. Chal. So this section casts responsibility on every person paying, responsible for paying to resident any income by way of interest on security. Section 193 deals with only on interest on securities. The rate of TDS is 10%. The rate of TDS is 10%. Time of deduction. See, my dear friend, please be careful. ध्यान से समझ लेना इसे. It will come in every section. Majority of section. The time of deduction. From subsequent section, I will use the term credit or payment. Whichever is earlier. Now everyone knows the term payment, right? Payment means whenever you are actually paying to the person by way of check, cash, draft, or any other. Now what is the credit? Credit means entry in the books of account. Entry in the books of account. Say for example, as a company, I have to pay interest on security to Mr. X. Now, see, it is 50,000 only from all your employer. So say for example, as a company, ABC Limited is required to pay interest on security to Mr. Y of rupees 50,000. Say for example, ABC Limited pass an entry in books of account on 1st January 22. Yeah, 1st June 22. So what is the entry? Interest expense debit 50,000 to Mr. X. 50,000. Here the credit means credit in the books of account. Say for example, the payment is made on 1st July 22. So what is the entry? Mr. X 50 debit to bank. Right? So what is the time of deduction of tax? Credit in the books of account or payment, whichever is earlier. Payer is the issuer of security. Company, जिससे आप security purchase करोगे, that will be the payer, or that person who pay the interest, that is the payer. Majority case में company. Clear everyone, what is the meaning of credit in the books of account and payment, whichever is earlier? Now going forward in majority section, the time of deduction of TDS is credit or payment, whichever is earlier. Everyone clear with this? The term credit, whatever is the name of account. Say for example, instead of Mr. X, you will pass this entry as interest payable account or suspense account by whatever name called. If you are passing entry in the books of account, that is the credit in books of accounts. So the time of deduction of tax is credit or payment, whichever is earlier. Clear everyone? Clear this concept? So just write down here only, that is credit or payment, whichever is earlier, so that at the time of revision, you are not required to learn the entire paragraph if you know the concept. Whichever is earlier, not whichever is higher. Here there is no higher. Yes, TDS on interest amount. Here the section itself says that it is interest. Clear everyone? Non-applicability. See, there are certain type of bond or debenture on which tax is not required to be deducted by company whenever making the payment or whenever passing the entry in the books of account. So on which type of these are the name of bonds on which tax is not required to be deducted. So on national development bond, if government paying interest on national development bond, then TDS is not required to be deducted. 7-year national savings certificate on debenture issued by institution or authority or any public sector company or cooperative society as notified by central government. See, here the notification is given. The central government says that in PFC bond, that is Power Finance Corporation bond, and REC bond, Indian Railway Finance Corporation bond. So if government is paying interest on this bond, that is REC bond, you have already learned this bond in 54 EC capital gain chapter. So in that case, the TDS is not required to be deducted by the government. They directly will pay the tax without pay the interest without deduction of tax. So government has power to notify certain type of bond on which tax is not required to be deducted. The TDS payable entry is a separate thing. It is an accounting treatment. What you have to learn is what is the meaning of credit in the books of account only for the tax purpose. You have to pass an entry of TDS payable account. And whenever you make the payment to the government, yes, Kavita, on any security of central government or state government, on any debenture, whether listed or not on recognized stock exchange issued by a company in which public are substantially interested to resident individual or HUF. So if a listed company is issuing debenture, then the company is required to pay interest on that debenture, right? So if a listed company is paying interest on debenture to individual and HUF, then they are not required to deduct TDS if the payment is made by account pay check. That means if the payment is made in cash, then the TDS is required to be deducted. And the amount of such interest or aggregate thereof paid or likely to be paid during financial year by the company to such resident individual or HUF should not exceed 5,000 rupees. Right? So, for example, if a company is paying interest on debentures, say for example 7,000 rupees to Mr. X, then whether the company is required to deduct TDS or not. Chalo, everyone. A listed company is required to pay 7,000 interest on debenture to Mr. X, whether the company is required to deduct TDS or not. Quickly. Zero, there is no interest on zero coupon bond. Chalo everyone, give me an answer. If a listed company is required to pay interest on debenture to Mr. X amounting to rupees 7,000, will the company required to deduct tax? Yes or no? Yes, the TDS is required to be deducted. Why? Because the amount of interest is more than 7,000. On security to LIC, GIC, subsidiary of GIC or any other insurer, provided the security are owned by them or they have full beneficial interest in such securities. Very good, everyone. On any security issued by a company where such security is in dematerialized form and is listed on recognized stock exchange in accordance with the Security Contract Act and rules made thereof. Here, no threshold limit is given, so any amount of interest you have to deduct tax, except in case of debenture, there is a limit is given, that is 5,000. Next is section 194. that is TDS on dividend. Who will pay the dividend here? Who will be the payer? The domestic company. And who is the recipient? That is payee, resident shareholder. So if the shareholder is non-resident, then this section is not applicable. Why? Because here the payer should be domestic company and the payee should be resident shareholder. Clear, everyone? So whenever a company is paying dividend, domestic company is paying dividend to resident shareholder, then the company is required to deduct tax on such dividend at the rate of 10%. The rate of TDS on dividend is 10%. Here the time of deduction is, the deduction of tax has to be made before making any payment by any mode in respect of any dividend or before making any distribution or payment to resident shareholder of any amount deemed as dividend under section 222A, B, C, D, E. Everyone knows about 222 A, B, C, D, E, right? Deemed dividend. So here the time of deduction is before making payment or before distributing deemed dividend. Okay? Non-applicability of section 194. When the TDS is not required to be deducted, so in case when the dividend is paid to an individual shareholder, and the mode of payment is other than cash and the amount of dividend is less than 5,000. So if, say for example, XYZ Limited is paying dividend to Mr. X amounting to rupees 3,000 by way of check. Chalo. Is TDS is applicable? Yes or no? XYZ is paying dividend to Mr. X rupees 3,000 by way of check. Is the TDS is required to be deducted? Yes or no? Yes or no, everyone? Quickly give your answer. No. The TDS is not required to be deducted as the amount is less than 5,000. The dividend amount is less than 5,000. It is 3,000. And the payment mode is check. That is other than cash. What if the 3,000 is paid by way of cash in cash? Whether TDS is required to be deducted? Yes or no? Yes, the TDS is required to be deducted, right? Why? Because the mode of payment is cash, that is other than check or anything. When the TDS is not applicable, when the payment is made other than cash. Here the payment is made in cash, okay? So, and say for example, the dividend amount is 10,000 and the dividend is paid by way of check. Then the TDS is applicable or not, everyone? If the amount of dividend is 10,000 and the payment is made by way of check, yes. Why? Because the payment is more than 5,000 rupees. Very good, everyone. The TDS provision will not apply to such dividend credited or paid to LIC, GIC if you are paying dividend to life insurance company. Yes, everyone answer is I'm able to view. If you are paying dividend to a life insurance company, general insurance company or subsidiary of GIC or any other insurance company, provided the shares are owned by them, then no TDS is required to be deducted. Okay? Or any other person as the government notifies. Chalo, next section is interest other than interest on securities. 194A. Now 193 deals with interest TDS on interest on securities. Now 194A deals with TDS on interest other than interest on security. Why? Because both conditions should be fulfilled. Interest on securities deal with 193. So here the interest other than interest on security discounts. Now what is the interest other than interest on securities? So for example, fixed deposit interest, right? Interest on term deposit, interest on loan given to anyone. Applicability of TDS under 194A. This section applies only to interest other than interest on security credited or paid by assessee other than individual or HUF. Here the payer is anyone other than individual and HUF. So as a partnership firm, if you are paying interest on loan, you have to deduct tax. As a company, you are paying interest, you have to deduct tax. But as an individual, if you are paying an interest, you are not required to deduct tax, except if you are paying dividend to LIC, then the TDS is not required to be deducted. Except in those individual or HUF whose turnover is greater than 1 crore, or if professional, then gross receipt greater than 50 lakh in immediately preceding the financial year. So if you are calculating, if you are checking the TDS applicability of individual for previous year 2022-23, that is whether the TDS is required to be deducted by an individual in previous year 22-23, then you have to check whether in previous year 21-22, whether in previous year 21-22, the turnover of individual is more than 1 crore. If yes, then while paying interest other than interest on security, the individual is required to deduct TDS in previous year 22-23. If no, then the TDS is not required to be deducted. Same, if you are a professional, then you have to check whether in last year the gross receipt of an individual is more than 50 lakh. If yes, then in current year, he is required to deduct tax on interest other than interest on security. If no, then he is not required to deduct tax on interest on security. Everyone clear with this? This is only and only for individual and HUF as a payer. So if you are an individual and you are paying interest other than interest on security to anyone, then you have to check whether your turnover in last year is more than 1 crore. If yes, then in current year you are required to deduct tax on such interest. If no, then you are not required to deduct tax on such interest. Is that clear, everyone? This will also come in majority section. Yes or no? As a payer, every payer is responsible for deduction of tax on interest on security other than interest on securities, except individual and HUF. Those individual and HUF whose turnover from business is more than 1 crore, and in case of profession, the gross receipt is more than 50 lakh in last year. Is that clear, everyone? Again, here the deduction of tax, time of deduction is credit or payment, whichever is earlier. I have already explained the meaning of credit or payment, right? Credit means credit in the books of account. So write down here credit or payment. Whichever is earlier. No, both are the separate thing. So you have to check separately for business and profession. The rate of TDS is 10%. The rate of TDS is 10%. Non-applicability of TDS under section 194A. When the TDS is not required to be deducted. So if aggregate for the year you are paying interest, the amount of interest is less than 5,000 or it is 5,000. Okay, then the TDS is not required to be deducted. The limit of 5,000 is 40,000 when the payer is bank or cooperative society engaged in banking business or post office. Say for example, you are having a fixed deposit in bank and bank is paying 35,000 interest to you for the year, for entire year. So the amount of interest is less than 40,000. Yes, then the bank is not required to deduct TDS on such interest. Is that clear? And if the payee, that is the recipient, is senior citizen, then the limit is 50,000 instead of 40,000. Clear, everyone? Yes or no? The time limit will be calculated with respect to income credited or paid by branch of banking company or cooperative banking company. In case of time deposit with banking company or time deposit with cooperative society carrying on business of banking and deposit with housing finance company, provided they are public company formed and registered in India and their main object is to carry on business by providing long-term finance. Now we are discussing the non-applicabilities when the TDS is not applicable. Yes. Bank will never pay interest in cash. They will directly credit the interest in your account. You can withdraw the same. Now interest paid or credited by firm to any of its partners. So if a partnership firm pay interest or capital to its partners, then the TDS is not applicable. We are discussing non-applicabilities, right? Interest paid or credited in respect of deposit under any scheme framed by central government and notified by it. Interest income credited or paid in respect of deposit with a bank to which Banking Regulation Act apply. Same in case of cooperative society. Interest income credited or paid in respect of deposit with primary agricultural credit society or a primary credit society or cooperative land mortgage bank or cooperative land development bank, then they are not required to be deducted TDS. However, if in case of ENF above, the total gross receipt or turnover of cooperative society is more than 50 crore during last year, then the TDS is applicable. Here the limit also is applicable, threshold limit, that is 50,000 in case of payee being senior citizen and 40,000 in case of other cases. Cooperative society is required to deduct tax under section 194A on interest credited or paid by it to its member or any other cooperative society. If the cooperative society is paying interest to their members, then also TDS is applicable. Or in respect of deposit with primary agricultural credit society or primary credit society or a cooperative land mortgage bank or cooperative land development bank. Or in respect of deposit with cooperative bank other than cooperative society or bank engaged on business of banking. Interest income credited or paid by central government under the provision of Income Tax Act 1961. See, if you are paying extra tax They may ask in MCQ, Kavita. If you are paying extra tax, then the income tax will give the refund, right? So on refund, the income tax will give the interest. So on that interest, the income tax department will not deduct TDS. Interest paid or credited to following entity, banking company. If you are paying interest to bank, say for example, you are taking loan from bank, right? So you are paying interest to bank, then you are not required to deduct TDS. Why? Because it is given in non-applicability. Interest paid or credited to bank. So you are paying interest to bank, then the TDS is not applicable. Same in case of cooperative society. Financial corporation, LIC, other companies, unit trust of India, or notified institution association by central government. Income paid by way of interest on compensation amount awarded by Motor Accidental Claim Tribunal where the amount of income, or as the case may be, the aggregate amount of such income paid during the financial year does not exceed 50,000. See, if you are, if in motor accidental claim, if you are receiving any claim amount and the claim amount is delayed, then you are eligible for interest on that claim amount, right? So if the interest is less than 50,000, then TDS is not required to be deducted. So basically here, 194A. No. In case of HUF, only the limit is 40,000 is applicable. In case of individual, only 50,000 is applicable if the individual is a senior citizen. You have not required to take that if the Karta is senior citizen, then the limit is 50,000. No, that is not the case. Key point is, say for example, I have paid tax of rupees 50,000 and my tax liability is 10,000 only. So government will give refund of this 40,000, right? So on this 40,000, government will pay interest. Say for example 1,000 or any amount. So on that interest, the TDS is not required to be deducted. Chalo, I'll briefly explain you the whole section 194A. 194A is TDS on interest other than interest on securities. The rate of TDS is 10%. The super senior citizen, irrespective of the amount, limit is 50,000 only. The rate of TDS is 10%. The time of deduction of tax is payment or credit, whichever is earlier. No tax is required to be deducted if the interest amount is less than 5,000. And if the interest is paid by banking company, then the limit is 40,000. If the interest is paid by banking company to senior citizen, then the limit is 50,000. ओके वेदांत, मैंने ऑलरेडी आपको पूरा शॉर्ट में समझा दिया. So the bank, if say for example you are having fixed deposit in bank and bank is paying 45,000 interest, then the bank is required to deduct tax at the rate of 9%, that is 4,500 on that interest. Here the circulars are given that central government may issue the specified by way of notification that on specified securities the non-deduction of tax is applicable. In case of minor child, the PAN of his legal guardian should be given for deduction of tax. See, in minor child, the income is clubbed in the hand of parents, right? So you have to provide and if the parents, if the both parents are deceased, that is, the minor child does not have a parent, then the TDS is required on minor child span, or if you are providing his legal guardian span, then the TDS is required to be deducted on his legal guardian. Or you have learned the concept of capital gain account scheme in capital gain chapter. So if the depositor is deceased, that is, the depositor is dead, then the TDS is required to be deducted on his legal heir. You have to provide the PAN of legal heir so that he can claim credit of TDS. So let us discuss the illustration 1. Examine the TDS implication under section 194A in case mentioned here under. On 1/10/22, Mr. Harish made a 6-month fixed deposit of 10 lakh at 9% per annum with ABC Cooperative Bank. The fixed deposit mature on 31st March 23. Chalo, in first case, whether the TDS is applicable or not. So here it is not given that Mr. Harish is a senior citizen, so he is not senior citizen. So what is the interest amount? 10 lakh into 9% into 6/12. So the interest amount is 45,000. Bank is required to pay. Yes. Bank is required to pay 45,000 interest. So is the TDS is applicable? Yes. The interest amount is more than 40,000. So TDS is required to be deducted under section 194A. And the rate of TDS is 10%. The amount of TDS is 4,500. Is that clear, everyone? On 1/6/22, Mr. Ganesh made 3 9-month deposit of 3 lakh each, carrying interest at the rate of 9% per annum with Dwarka branch, Janakpuri branch, and Rohini branch of XYZ bank. See, you have to check the limit bank wise, not the branch wise, right? Because now everything is centralized. A bank which has adopted CBS, that is core banking solution. The fixed deposit mature on 28th Feb 23. Chalo. What is the interest amount? 3 lakh deposit into 3 branch into 9% rate of interest and for 9 months. So what is the interest? 60,750. 3 lakh rupees 3 branch. उसने 3 लाख रुपए की डिपॉजिट द्वारका ब्रांच में करी, 3 lakh in Janakpuri branch and 3 lakh in Rohini branch. So 3 lakh into 3 branch into 9% rate of interest, and the deposit period is 9 months. Right? So interest is 60,750. So TDS is applicable? Yes. Why? Because the interest amount is more than 40,000. Rate of TDS is 10%. So the amount of TDS is 60,700. On 1/10/2022, Mr. Rajesh started a 6-month recurring deposit of 2 lakh per month at 8% per annum with PQR Bank. The recurring deposit mature on 31st March 23. Here, my dear friend, it is a recurring deposit. So he is depositing 2 lakh rupees every month, right? So the deposit made on 1st October 22, he will receive the interest for 6 months. For deposit made on 1st November, he will receive the interest of 5 months. So here 6 plus 5 plus 4 plus 3 plus 2 plus 1. So 21/12, yes or no? For October, the deposit made on October, he will receive the interest for 6 months. For deposit made in November, he will interest receive for 5 months. For deposit made in December, he will receive interest for 4 months. For deposit made in January, he will receive the interest for 3 months, right? So this concept is learned by you in 11th, 12th standard. 2 lakh rupees. The deposit amount, 8% is rate of interest and 21 by 12. It comes to 28,000. Here the TDS is not required to be deducted. Why? Because the amount is less than, the interest amount is less than 40,000. Is that clear, everyone? Yes or no? Everyone clear? Chalo, next is Section 194B and 194BB, winning from lottery, crossword puzzle and horse races. See, this all are casual income. As you all know, in income from other sources chapter. So here, the TDS is required to be deducted at the, you see, income tax is charged at the rate of 30%. You all know that, right? So same, the TDS is applicable 30% only. So the payer of lottery ticket or crossword puzzle or any game, that is whenever you win from, for example, Kaun Banega Crorepati, then the Kaun Banega Crorepati is required to deduct TDS on winning price at the rate of 30%. Here the TDS is required to be deducted at the time of payment. And the rate of TDS is 30%. The threshold limit is 10,000. So if the winning price is less than 10,000, then the TDS is not required to be deducted. But if the winning price is more than 10,000, then the TDS is required to be deducted at the rate of 30%. Right? If the winning price partly in cash or partly in kind, then it is responsibility of payer that before releasing the winning price, all the TDS is paid. Okay? Now, who is the payer? So, bookmaker or the person to whom the license is issued for horse racing. Okay. Again, the limit for 194BB is also threshold limit is 10,000. The rate of TDS is 30,000, and the payment time of deduction is at the time of payment. Best example is Kaun Banega Crorepati. Before making payment, they have to deduct TDS at the rate of 30% if the amount is more than 10,000. Is that clear, everyone? It is a very easy section. Both are very easy as you have already learned the concept of casual income. Clear? Next is 194C. That is payment to contractor or subcontractor. See, in offices, if there is so many computers or so many systems are there, right? So for maintaining that computers or system, you are giving a contract to some computer agency, that is annual maintenance contract, that every month or every quarter you have to come and check our PCs, our systems, everything. So that is the contract. So in case of contract, 194B and BB is applicable to casual income. That is winning from lottery, crossword puzzle or any game, horse race, etc. So say for example, so the payer is a contractor, payer is a specified person and the recipient is a contractor. Payee is a contractor. Let us discuss 194C. Provide for deduction of tax at source from payment made to resident, contractor and subcontractor. Here the payee should be resident. Tax has to be deducted at source under section 194C by any person responsible for paying any sum to resident contractor for carrying out any work in pursuance of contract between contractor and the government So if the government is giving contract, then the government is also required to deduct TDS. Any local authority, statutory corporation, company, cooperative society, any statutory authority dealing with housing accommodation, or any society registered under Society Regulation Act, or any trust. Any university, any firm, any government or foreign state, an individual and HUF, again, those individual or HUF whose turnover in last year is 1 crore, more than 1 crore, or if the professional, then the receipt, gross receipt in last year is more than 50 lakh. So as an individual, if I am giving a contract to for maintenance of computers at my offices, in my office, then do I need to deduct TDS? Yes or no? In first case, if my gross receipt in last year is more than 50 lakh, then I have to deduct TDS on that contract in current year, right? Suppose in last year my gross receipt is 35 lakh, then in current year I am not required to deduct TDS on that contract. Clear everyone? Yes or no? This point is clear. Those individual and HUF required to deduct TDS in current year if in last year, if there is a business, then the turnover is more than 1 crore, and if there is a profession, then the professional receipt is more than 50 lakh. Otherwise, they are not required to deduct TDS. Again, the time of deduction is payment or credit, whichever is earlier. Here, the TDS is not required to be deducted when the contract is given for personal purpose. Say, for example, if you are giving electrician a contract for your electrification of your house, then it is for personal purpose. Then the TDS is not required to be deducted. The rate of TDS is 1% if the payee is an individual or HUF. Say, for example, ABC Limited give a contract for a computer annual maintenance service to Mr. X. Then in that case, the payee is Mr. X. That is the contractor. The recipient is Mr. X. And Mr. X is an individual, right? So ABC Limited will deduct TDS at the rate of 1%. Say, for example, ABC Limited give a contract to XYZ partnership firm. Then the payee is firm. That is other than individual or HUF. Then the ABC Limited is required to deduct TDS at the rate of 2%. So here the rate of TDS is 1% if the payee is individual or HUF. Other than individual HUF, the rate is 2%. If the contractor is in the transport business and they are providing their PAN, then the TDS is not required to be deducted. Same in case of subcontractor, if it is in transport business and the PAN is given, then the TDS is not required to be deducted. The threshold limit here is the 30,000. So if the single bill is 30,000 or less, then the TDS is not required to be deducted. But you have to check whether in aggregate the amount is more than 1 lakh. Yes, then the TDS is required to be deducted. Say, for example, ABC Limited given a contract to Mr. X. Mr. X raised 5 bill of 25,000 each. Pay need to give PAN to the payer. So 5 bill of 25,000. So up to 4 bill, the single bill is less than 30,000 and the aggregate is less than 1 lakh. So no TDS is required to be deducted. But at the time of 5th bill, the single bill is less than 1 lakh, but the aggregate is 1,25,000, right? So that is more than 1 lakh. So now on 1,25,000, 1%, that is 1250. TDS is required to be deducted from last bill. So you have to check both the limit. That is the single bill is less than 30,000 or the aggregate bill value is all the bill value for the year is less than 1 lakh, then the TDS is not required to be deducted. Otherwise, TDS is required to be deducted. Right? Let us discuss this illustration 2, and after illustration 2, we will have a break of 5 minutes. Okay? So let us discuss illustration 2. ABC Limited make following payment to Mr. X, a contractor. Here the payer is ABC Limited and the payee is Mr. X. So the rate of TDS is 1%. Yes or no, everyone? For contract work during previous year 22-23. The first bill is 20,000 on 1st May 22. Is the TDS is applicable? No. Why? Because the single bill is less than 30 and aggregate is less than 1 lakh. On 1st August, the another bill is 25,000. Will the TDS is applicable? No. Why? Because the single bill is less than 30 and in aggregate it is less than 1 lakh. On 4th bill 112, on 3rd bill 112-22, the value is 28,000. Is the TDS is applicable? No. Why? Because the single bill is less than 30,000. In aggregate, it is less than 1 lakh. Now on 4th bill, the bill is 30,000. Is the TDS is applicable? Yes. Why? Because the single bill is 30,000, but in aggregate, it exceeds 1 lakh rupees. Right? On 4th bill, the value of contract is 1 lakh 3,000. So the TDS is required to be deducted at 1% on 1 lakh 3,000. That is 1030 from last bill. From last bill. That is from 30,000, 1030 TDS is required to be deducted. See the value, the TDS is required to be deducted before GST, excluding GST. The circular is given. We will discuss in later part. Okay. So we will take a break of 5 minutes. After that, we will discuss the definition of work and non-applicability of section 194C. Clear everyone? Chalo, have a break of 5 minutes. the work, the definition of work, that work includes advertising. So if you are giving contract of advertising, then also the liability of TDS is arise. Broadcasting and telecasting, including production of program for such broadcasting or telecasting. Carriage of goods or passenger by any mode of transport other than by railway. Catering. This is important and interesting. Manufacturing or supplying a product according to the requirement or specification of customer by using material purchased from such customer or its associate being person related to customer in such manner as defined in 40A to B. आनंद आप बहुत आगे चले गए. If there is no deduction of TDS, then there is an interest provision is there. We will discuss the same, and the TDS is your liability, not your income, not income tax, not GST, or not, it is not your PGBP income. The TDS is your liability. You will have to pay. You will deduct that from from your payment to the recipient, and you have to deposit the same to the government. If you fail to deposit the same to the government, then there are the consequences that we will discuss in later part. Now, say for example, if you are giving any contract for manufacturing or supplying a product according to your requirement, according to your specification, and the contractor is purchased the material from you or your relative, then it is treated as contract. But say for example, I need say Zomato need a tape on which the red tape on which the Zomato is printed on white, right? So if the Zomato is giving a contract for a manufacture of such a tape to any person, and for that purpose the raw material is purchased by contractor from Zomato or relative of Zomato, then it is treated as contract. If the contractor is purchased the raw material for production of that tape from other person, that is other than Zomato or his relative or its relative, then it is not treated as contract. It is sale of goods. So if for specific manufacturing, according to the requirement of customer, if the contractor purchased the material from customer, then it is treated as contract. Otherwise, it is not treated as contract. Clear, everyone? Let us discuss the non-applicability. Up till now, clear? Yes or no? Everyone, please give me the answer. Up till now, it is clear? Yes or no? Pi says that if you are giving see for example, Zomato will give the production contract for production of that particular tape to Mr. X, right? Now for manufacture of that tape, Mr. X need raw material. Okay. So if Mr. X purchased the raw material from Zomato, then it is treated as contract. If Mr. X purchase material from some other person, that is from third party, not from Zomato, from third party, then it is not treated as contract. Clear, everyone? Next is non-applicability. Now you all learn the section 44AE, that is transporter, right? So if you are taking transport service from a transporter who is offering income under section 44A, that is he owns 10 or less heavy goods vehicle at any time during the previous year and is engaged in the business of flying or hiring or leasing of goods carriage. And he has furnished his PAN to you, then you are not required to deduct TDS. Say, for example, ABC Limited is given a transport contract to Mr. X. Mr. X is having less than 10 vehicle, and Mr. X will provide his PAN and declaration that I am having less than 10 vehicle to ABC Limited. Then the ABC Limited is not required to deduct TDS on such payment. Clear? Now the deduction of TDS is at the time of payment or credit, whichever is earlier. Now there is a circular that deduction of tax at source on payment of gas transportation charges by purchaser of natural gas to the seller of gas. So here the TDS is not required to be deducted on transport charges paid by purchaser of natural gas to the seller of gas. You have to remember only that. Okay, no TDS is required to be deducted on payment of gas transportation charges by purchaser to natural gas to the seller. That's it. You have to remember that. Next is applicability of TDS provision on payment by broadcaster or television channel to production house for production of content or program for telecasting. Here what happened, my dear friend? If a television channel wants certain product to produce on their television channel, so they will give a contract to broadcaster, to production house, that you will make that type of program for our channel. Okay. So in that case, the TDS is applicable. Why? Because the specification is given by television channel to the production house, and production house will produce the content as per the requirement of television channel only. Okay. Then the TDS is required to be deducted under section 194C. But say, for example, one program is ready. Okay, one TV show, that is Shark Tank, is ready. Okay, and or else we can say the Master Chef is ready, right? And the Master Chef approach the television channel that we want our program to be published or released on your television channel. Then in that case, if the Star Plus is agree, then the TDS is not applicable. Why? Because here the program, that is Master Chef, is not done by as per the specification or guidance given by the Star Plus. It is already readily produced program which a production house want to publish on or want to telecast on television channel. So in that case, TDS is not applicable. Here there is the one question is given for that. We will discuss the question later. But there is one question. So in this case, if the content is ready by production house, the second point, I am discussing the second point. If the content is ready, say for example, the show is ready by the production house as per their requirement, and they want some television channel that, for example, yes, Karthik. For example, Tarak Mehta Ka Ulta Chashma is done by one production house, and they want the show is telecast on Sub TV, right? So in this case, the TDS is not required to be deducted. Why? Because the Tarak Mehta Ka Ulta Chashma is already produced by some production house as per their requirement, and it is the only telecasting right given by the television channel. But say for example, Sub TV want that some give contract to some production house that produce that content as per the requirement of sub TV, then in that case the TDS is applicable. Why? Because the production house will produce the program as per the requirement of Sony TV, sub TV. Okay. Here the question is transport operator, that you have already learned this in 44A and that 40A. That is, if the cash payment of 35,000 in a day is made to transport operator, then it is fine. It is not disallowable. The rate of TDS, everyone knows, 1% if the payee is HUF for individual and 2% in any other case. For transporter के case में there is no deduction of TDS. Everyone clear with this? Just a minute, we will discuss that illustration. The television channel illustration. Just a minute, I will find the same. Yeah, come on. It is the same circular that we have discussed. Come on, page number 9.35, illustration number 6. Moon TV, a television channel, made a payment of 50 lakh to production house for production of program for telecasting as per the specification given by channel. See, for the star award, you have to check the arrangement between them. Without agreement or without knowing arrangement, how can you decide? See, in this case, the Moon TV is a television channel. They made a payment of 50 lakh to production house for production of program as per the specification given by the Moon TV. So here in this case, the copyright of program is also transferred to Moon TV. Would such payment be liable to deduct TDS under section 194C? Yes or no? Yes, my dear friend. Here the 194C is applicable. Why? Because the production house produced the program as per the specification given by the Moon television channel, and for copyright is also transferred to the television channel. So here the 194C is applicable. Also examine whether the provision of tax deduction at source under section 194C would be attracted if the payment was made by Moon TV for acquisition of telecasting right of the content already produced by the production house. Just I told you earlier, that is Tarak Mehta Ka Ulta Chashma is already produced by production house. It is just telecasting right taken by sub TV, right? So in the second case, that is the acquisition telecasting right for content already produced by the Moon TV, already produced by the production house, the TDS is not applicable. Is that clear, everyone? Yes or no? So when the content is already produced by the production house and the television channel only acquire the telecasting right, then the TDS is not applicable. If the production is done as per the specific requirement of television channel, then the TDS is required to be done. Okay. Sure. Next is 194D, that is insurance commission. See, there is a in your house you may see that the insurance agent will come and provide you the policy and etc. Right? So on that policy, they will earn a commission. Okay. So on insurance policy, an insurance agent will receive commission from insurance company. Here the Payer is insurance company because it is insurance commission only, and the recipient is agent of insurance company. Okay. For new policy, they sell the policy to the customer and they will receive the premium, commission, or for renewal of old policies, etc. Okay, so here the payer is insurance company and payee is the agent of insurance company. The rate of TDS is 5%. Again, the time of deduction of TDS is at the time of payment or credit, whichever is earlier. So write down here, highlight the rate 5%. Write the time of deduction is credit or payment. Whichever is earlier, the threshold limit is 15,000. If commission paid during the financial year is less than 15,000 or exceed 15,000, then no TDS is required to be deducted. But if the commission is more than 15,000, when the commission is more than 15,000, then the TDS is required to be deducted. Clear? It is very important. ध्यान से समझ रहा हूं. Payment in respect of life insurance policy. At maturity, you will receive life insurance policy. I guess you will already studied the 1010D in section 80C in deduction from gross total income chapter. Everyone knows about 1010D, yes or no? Yes or no? Let me know so that if nobody knows, then I'll explain the same. Right? So as per section 1010D, the maturity of LIC policy, maturity के time पे आपको जो भी पैसा मिलेगा, that is the maturity proceeds from LIC policy is exempt under section 1010D if the policy taken after 1/4/2012 and the premium is less than 20% of, I'm explaining Anand, just be careful, less than 10% of sum assured. If policy taken after 1st April 2012 and the premium paid for that policy is less than 10% of sum assured, then the maturity proceeds. No, the payment is not earlier, Vedant. In majority case, the first entry, see, whenever you receive an invoice, you will pass an entry in the books of account, and there is a credit period that within 30 days from the date of invoice, you have to make a payment. It is not every time that first you will receive the payment and then you will give the services. So here, if the policy is taken after 1st April 2012 and the premium paid for such policy is less than 10% of sum assured. Now, what is sum assured? Sum assured is the amount. Sum assured is sum assured. Sum assured is the amount that the fixed amount that you will receive at the time of maturity. Say, for example, I am taking a policy for 10 years. So in my policy, it is written that after 10 years, you will surely receive, say, for example, 15 lakh rupees. That is sum assured. I may receive more than 50,000, but not 15 lakh, but not less than 15 lakh. Okay. So if your premium is less than 10% of sum assured, then at the time of maturity, whatever amount you will receive, it is exempt from tax. The income is exempt, so no TDS is required to be deducted. And same if the policy is taken before 1st April 2012 and your premium is less than 20% of sum assured, then again the maturity is exempt. But say for example, you are taking a policy on after 1st April 2012 and the sum assured premium is more than 10% of sum assured. Say for example, sum assured is 10 lakh and the premium is 1,20,000. So it is more than 10% of sum assured? Yes. So in that case, the maturity is taxable. Whenever the maturity is taxable, the insurance company paying the maturity proceeds is required to deduct TDS. The rate of TDS is 5%. And on which amount the TDS is required to be deducted? So maturity proceeds less premium paid. On balance amount, LIC will deduct TDS at the rate of 5%. If the maturity proceed is less than 1 lakh, then no TDS is required to be deducted. If maturity proceed is less than 1 lakh, then no TDS is required to be deducted. So first, when 194DA comes into picture, when the maturity proceed is taxable. If the maturity proceed is exempt, then the whole income is exempt, so no TDS is required to be deducted. Yes, in case of disabled, it is 15%. So if maturity proceed is taxable, then only TDS is required to be deducted. Okay, so let us discuss, and after illustration 4, you will get better understanding of this provision. Taxability of sum received under life insurance policy. Under section 1010D, any sum received under a life insurance policy, including the sum allocated by way of bonus on such policy, is exempt subject to fulfillment of conditions specified under the said section. The condition is if the policy taken after 1/4/2012, the premium is should be less than 10% of sum assured. Consequently, the sum received under life insurance policy which does not fulfill the condition specified under section 1010D is taxable. So section 1010D ki condition, if it is not fulfilled, then the majority is taxable. If the policy is taken after 1/4/2012 and the sum assured is more than 10%, then the premium is more than 10% of sum assured, then the majority is taxable. It is not exempt under 1010D. The rate of TDS is 5% on the amount of income comprised there, that is the maturity proceed minus insurance premium paid by the resident associate. Threshold limit is 1 lakh. If the maturity proceed is less than 1 lakh, even if it is not exempt under 1010D, TDS is not required to be deducted. Let us discuss the illustration 4 for better understanding. Examine the applicability of provision for tax deduction at source under section 194DA in the following cases. Mr. X, a resident, is due to receive 4,50,000 on 31st March 23 towards maturity proceed of LIC policy taken on 1/4/2020. So he has taken a policy on 1/4/2020, that is after 1/4/2012, for which the sum assured is 4 lakh. So you have to check whether the actual premium is less than 10% of sum assured or not. Policy is taken after 1/4/2012, so we have to check 10%. Sum assured is 4 lakh, 10% of 4 lakh is 40,000. You have to check whether your actual premium is less than 40,000 or more than 40,000. If it is less than 40,000, then TDS is not required to be deducted. If why? Because the premium is less than 10% of sum assured. If the premium is more than 40,000, then the TDS is required to be deducted. Right? So here what happened? My premium is 1,25,000 annual premium is. So it is more than 40, yes. So the maturity proceed 4,50,000 is taxable. Therefore, the TDS is applicable. Now, TDS is applicable on which amount? 4,50,000 maturity proceed minus premium paid. Now, I am receiving maturity on 31st March 23 and I had paid annual premium 1,25,000 from the date of policy. That is for 2021, 1,25,000, 21, 22 and 22, 20, 2021. So I had paid total 3,75,000, right? I had paid premium for 3 years. So total premium paid is 3,75,000. So on balance amount, that is 75,000. 5% TDS is required to be deducted by the LIC policy at the time of payment. Clear everyone? First point. Let us discuss the second point. Mr. Y, a resident, is due to receive 3,95,000 on 31st March 23 on LIC policy taken on 31st March 2012. Here, we have to check. Here, Mohammed, the answer is not 37,500. Here, the policy is taken before 1st April 2012. So, we have to check 20%. Right? So, the sum assured is 3,50,000. So 3,50,000, 20%, कितना आएगा? 70,000, yes or no? 20% of sum assured comes to 70,000, yes or no? Yes. And my actual premium is 26,100. So the premium is less than 20% of sum assured. So entire maturity process is exempt. Therefore, TDS is not required to be deducted. Everyone clear with point number 2? Just go through point number 1 and 2. कविता 3,75,000 ऐसे आया. उसने 2021 में ही paid 1,25,000 premium. 21-22 में he also paid 1,25,000 premium. See, you have to pay premium every year, right? Clear? कविता clear? 3,75,000 कैसे आया? चलो, point number 3. Mr. Y, a resident, is due to receive 95,000 on 1st August 22 towards maturity proceed of LIC policy taken on 1/8/2016. The policy is taken after 1st April 2012. For which sum assured is 90,000. So we have to check whether the premium is more than 9,000 or less. It is 3,750, Mohammed. You have to calculate again 75,000 into 5%. Now here, the premium is more than 9,000, right? So the maturity proceeds 95,000 is taxable. But here the TDS is not required to be deducted. Why? Because the payment is less than 1 lakh. Here the payment is 95,000, which is less than 1 lakh. That is threshold limit. So TDS is not required to be deducted. Here the maturity process is taxable, but the total payment made by insurance company is less than 1 lakh. Everyone clear with this? Just go through this illustration, and if you are having any doubt up till now, just let me know. We will discuss the doubt. After that, we will discuss the next section. For non-resident, this provision is not applicable. For non-resident, the TDS is required to be deducted under Section 195, and the same is not in your syllabus. You will study this at final level. Chalo, next. Here, this section is applicable only to non-resident. No. No limit is given. Next section, that is 194E, is only applicable to non-resident. Payment to non-resident sportsman or sports association. Say, for example, in India, there is an IPL, right? So the player of different country came and played. Okay. So in that case, the payment made to that non-resident sportsman, the TDS is required to be deducted under Section 194E. Okay. So this section is exclusively applicable to non-resident sportsmen. The section provides for deduction of tax at source in respect of any income referred to in Section 115 BBA. Which type of income we will discuss? The 115 BBA is given here only. Payable to non-resident sportsmen. For resident sportsmen, they are professionals and they are covered under 194J, that we will discuss later. Including an athlete or an entertainer who is not a citizen of India or a non-resident sports association or institution. Rate of TDS here is 20% plus surcharge if applicable, and education cess 4%. See, up till now you have studied so many sections. In no section there is given that you should apply surcharge or education cess. No. You have to apply the rate given in the particular section. But in this section, you have to add this add in 20% rate of TDS, plus you have to add surcharge plus this. Okay. So the basic rate is 20% plus surcharge is applicable plus 4% health and education cess. Time of deduction is again payment or credit, whichever is earlier. Now, what type of income is covered here? So, income by way of participation in any game, either cricket, badminton, any sports. Advertisement or contribution of article relating to any game or sports in India in newspaper, magazine or journal. See, in a IBL, they have made an advertisement, right? So for that also they will receive the payment. For they publish an article in journal or newspaper. For that also they will receive the payment. Guarantee amount paid or payable to non-resident sports association or institution in relation to any game or sports played in India. However, games like crossword puzzle, horse race is taxable under 115BB. We have already discussed the TDS under 194B and BB. So for horse race, crossword puzzle, the TDS is applicable under 194B and BB, not here. Because they are chargeable at higher rate, that is 30%. Income received or receivable by non-resident entertainer who is not a citizen of India from his performance in India. Okay, let us discuss the illustration number 5. Calculate the amount of tax to be deducted at source on payment made to Ricky Ponting, an Australian cricketer non-resident in India, by a newspaper for contribution of article rupees 25,000. Here the TDS is required to be deducted under section 194E at the rate of 20.8%. How 20.8? 20% basic TDS rate plus 4% cess. Here the surcharge is not applicable. Why? Because the payment is 25,000 only. And Ricky Ponting is a non-resident Australian player. Clear? So the TDS is required to be deducted at 25,000 into 20.8%. That comes to 5,200. Clear, everyone? I'll give you 2 minutes. Just go through this and earlier provisions. If you have any doubt, then just let me know. We will discuss, and after that we will discuss 194E. And in your homework, you have to write all the answers. Jitne illustration we have discussed, you have to write down in your notebook. Okay? Very good. Chalo. Next is payment in respect of deposit under National Savings Scheme. If you are deposited any amount in National Savings Scheme and you will receive any amount from that National Savings Scheme deposit, then at the time of payment, no, there is no threshold limit. Then at the time of payment, the National Savings Scheme will deduct TDS at the rate of 10%. Threshold limit is 2,500. If the amount paid by National Savings Scheme during the year is less than 2,500, then no TDS is required to be deducted. And if the depositor has died and the payment is received by his or her legal head, then this provision is not applicable and no TDS is required to be deducted. Here the time of deduction is payment. Write down at the time of payment. Next, 194F is for repurchase of unit by mutual fund or unit trust of India. If there is a buyback in case of shares, right? So same in case of mutual fund, if mutual fund or unit trust of India buy back, repurchase their units, then they are making payment to the seller. Okay. So they require to deduct TDS at the rate of 20% at the time of payment. So here the rate of TDS is 20% and the time of deduction is at the time of payment. Clear, everyone? Next is section 194G. That is commission on sale of lottery ticket. See, we will discuss three type of commission. One we have already discussed, that is the insurance commission. Second, we will discuss the commission on sale of lottery tickets. Third, we will discuss other commissions, that is other than insurance and sale of lottery tickets. Because for insurance and sale of lottery tickets, there are separate sections in the act is provided. So 194G is applicable. The person responsible for paying to any person any income by way of commission, remuneration, or price on lottery tickets. See, lottery winning prize is a separate thing, but the person who sell the lottery tickets, they will receive commission. Okay, so on that commission, the payer is required to deduct TDS at the rate of 5%. Again, the threshold limit is 15,000 if the commission is more than 15,000 during a financial year. Here, the TDS is required to be deducted at the time of payment or credit, whichever is earlier. TDS is required to be deducted at the time of payment or credit, whichever is earlier. This is 194H. This is other commissions. So here, any person other than individual or HUF, यानी यहाँ पे payer can be anyone, any person other than individual HUF. But again here the concept of those individual and HUF whose turnover is more than 1 crore or professional receipt is more than 50 lakh in the last year is required to deduct TDS in current year on commission or brokerage. Is that clear, everyone? Yes or no? Everyone is clear with this individual and HUF concept? TDS is required to be deducted by individual or HUF under section 194H only if they are in the business, their turnover is more than 1 crore in the last year. And if they are in the profession, their gross receipt is more than 50 lakh in the last. If no, then they are not required to deduct TDS under section 194H in current year. Is that clear, everyone? Yes or no? It is very important, my dear friends, because in later part there are so many sections which is related to this. Very good. So here the rate of TDS is 5%. Time of deduction is payment or credit, whichever is earlier. Again, the threshold limit is 15,000. If the commission amount is less than 15,000, then TDS is not required to be deducted. If the commission amount is more than 15,000, then the TDS is required to be deducted on entire amount. Commission or brokerage include any payment or received or receivable. Yes, you have to remember the threshold limit. See, in all commission cases, the limit is 15,000 only. Received or receivable, directly or indirectly by person acting on behalf of another person for service rendered or for any service in course of buying or selling of goods or in relation to any transaction relating to any asset, valuable article or things other than securities. You have to make a chart, and at the end of the chapter, the ICI has already issued one chart. You have to read that chart every day once. You will automatically remember all the section with threshold limit and everything. Non-applicability of section 194H. This section is not applicable to professional services. Why? Because for professional services, there is a separate section that is called 194J. Professional service means service rendered by person in course of carrying on legal, engineering or architectural profession, or the profession of accountancy or technical consultancy or interior decoration, or such other profession as notified by CBDT for the purpose of compulsory maintenance of books of account under 44AA. You have already learned section 44AA in PGBP chapter, right? Again, we will discuss the same under section 194G. Further, there would be no requirement to deduct tax at source on commission or brokerage payment by BSNL or MTNL to their public call office franchisee. No other condition is applicable. You have to check the turnover only, irrespective whether their books of account are audited in last year or not. You have to check the turnover limit only. That's it. If they are opting for 44AD, then also in current year they have to deduct TDS if in preceding financial year the turnover is more than 1 crore. Clear? Mohsin. Point number 6, we have already discussed that television channel. We have already discussed the illustration number 6. Now come on section 194I, that is rent. Up till now everyone clear? Yes or no? Yes or no everyone? Up till now everyone clear? Yes or no everyone? Yes, Mohsin, Mohammed. Chalo, next is rent. Any person other than individual or HUF. Here also, other than individual and HUF, every person is required to deduct TDS on payment of rent. Right? Here again, those individual and HUF whose turnover in the last year is more than 1 crore or professional receipt is more than 50 lakh is required to deduct TDS in current year on payment of rent. BSNL and MTNL is a franchises, landline franchises. The rate of TDS is 2% in respect of rent for plant, machinery or equipment. So if you are paying rent for plant, machinery or equipment, then the rate of TDS is 2%. 10% in respect of other payment, that is plant, machinery and equipment ke alawa, if you are paying rent for any other purpose, that is rent for the use of land or building or factory building or land appurtenant to building, including factory building, furniture, fittings, etc., the rate of TDS is 10%. This individual HF portion we have already discussed. The time of deduction again here is payment or credit. Whichever is earlier. Here the threshold limit is 2,40,000 in aggregate. Say for example, you are paying two type of rent. One is for plant and machinery and another is for land and building. So for both, if the aggregate amount is more than 2,40,000, then you are required to deduct TDS. Okay. So here the threshold limit is 2,40,000. If say for example, just let me know, XYZ firm is paying rent of rupees 1,20,000 for use of factory building to Mr. A. Will XYZ firm is required to deduct TDS? Yes or no? Chalo, I want an answer. Everyone, please give your answer, yes or no. XYZ firm is paying 1,20,000 rent on factory building to Mr. A. Will XYZ firm is required to deduct TDS? Yes or no? Chalo, everyone quickly. Yes or no? Yes or no? I want your answer. No, 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 no. Very good, everyone. Very good. No TDS is required to be deducted. Why? Because the rent is less than 2,40,000. Is that clear, everyone? Kavita, clear? Speaking of rent, rent means any payment by whatever name called under any lease, sublease, tenancy or other arrangement. आप उसको lease बोलो या rent बोलो, one in the same. Any land building, land appertaining to building, machinery, plant, equipment, furniture, the thing, whether or not any or all of the above are owned by the pay. Here is a circular that applicability of TDS provision under section 194I to payment made by customer on account of cooling charges to cold storage owner. See, here your purpose is to use cold storage to store your perishable goods, right? Not the premises. See, what happened here, the cold storage will not give you any rights that go and use that premises by whatever you want to store there, use by your own way. No, they are not giving you the ownership, right? What happened, they will provide you the space for storage of your goods as per the requirement of to preserve your perishable goods, right? There is a process to preserve your perishable goods. So cooling charges paid to the cold storage is not a rent, it is a contract. Okay, it is a contract. So on cooling charges, TDS is required to be deducted under section 194C contract and not under section 194I as a rent. Clear? Mohammed, if the rent is more than 2,40,000, then the TDS is required to be deducted on whole amount, not the exceeding amount. Clear? So you have to remember the TDS under section 194I is not applicable on cooling charges paid to cold storage because they store your goods. They provide you the process to store your goods, right? Again, you have to remember there is no requirement to deduct tax at source under 194I on remittance of passenger service fees by the airline to an airport operator. Right? Airline will pay the passenger service fee to transport the passenger. If you are at airport, you will there is one pass that take you and to you will reach the plane, etc. Right? So the passenger service fees paid by airline to an airport operator is not a rent. Okay, so no TDS is required to be deducted. Now there is no service tax. So you have to remember this circular, that is GST. You have to remember that TDS is required to be deducted without considering GST. That is, TDS is required to be deducted on basic amount, not on TDS amount or not on GST amount. Okay. So say for example, there is a bill of 2,50,000 basic value. plus GST. I'm taking just random figures, not on some percentage basis. So say for example, the 50,000 is GST. So total is 3 lakh. You have to deduct TDS under section 194I on 2 lakh 50 and not on 3 lakh. Okay. So GST is not included. Clarification on applicability of TDS provision under section 194I on lump sum lease premium. GST under RCM हो या straight या forward charges में हो, you are not required to deduct TDS on GST component. That's it. On lump sum lease premium paid for acquisition of long-term lease. If you are taking a long-term lease and you are paying lump sum lease premium, it is not the monthly payment, the lesser recover from you. It is upfront payment. So no TDS is required to be deducted under section 194I on upfront payment. That is one time. For example, 99 years lease. If you are taking any premises on 99 years lease, they will take one-time premium from you. So no TDS is required to be deducted on one-time upfront premium. Upfront charges. The issue of whether or not TDS under section 194I is applicable on lump sum lease premium or one-time upfront lease premium, lease charges paid by an assessee for acquiring long-term leasehold right for land or any other property has been examined by CBDT. Accordingly, CBDT has by circular clarified that lump sum lease premium or one-time upfront lease charges which are not adjustable against periodic rent paid or payable for acquisition of long-term leasehold right over land or any other property are not payment in nature of rent within the meaning of section 194I. Therefore, such payment are not liable for TDS under 194I. Yes, 194C is applicable on cold storage if the single bill is more than 30,000 or in aggregate it is more than 1 lakh rupees. 194I is not applicable on cooling charges paid to cold storage. Is that clear? Up till now, everyone clear? Just go through up till now, and if you are having any doubt, just let me know. I'll give you 2 minutes. Everyone, just quickly go through up till now. If you are having any doubt in any particular section, just let me know. प्रियंका, लमसम लीज प्रीमियम क्या होता है कि आप एक सिंगल प्रीमियम ले लेते हो एट द स्टार्टिंग ऑफ योर लीज और उसके बाद ये जो आपने प्रीमियम लिया ना वो आप सब्सिक्वेंट मंथ के रेंट के सामने एडजस्ट नहीं करोगे, वो आप सेपरेटली चार्ज करोगे. सो आप लमसम पेमेंट जो भी लोगे लीज का उसके ऊपर टीडीएस नहीं करना है. इज दैट क्लियर प्रियंका? $94. 194BB is for TDS on winning from lottery or crossword puzzles or horse race. 194BB is for horses. So if you are betting and if no number you don't have to learn for notification, you just remember the content. That's it. See, if you are winning from horse race, right? If in Jannat movie there is a horse race, so if you are winning from horse race, then on winning price they will deduct 30% TDS. Say, for example, your winning price is 1,50,000. Then 30% of 1,50,000 they will deduct as TDS, and balance they will pay to you. Here, आनंद, आपको कोई पर्टिकुलर सेक्शन में डाउट है या फिर यू जस्ट नीड टू रिवाइज दैट्स इट? Priyanka, clear your doubt? Yes or no? Yeah, definitely. Next session, first 10 minutes, we will discuss the doubts, and after that, we will go with other provisions. Clear, everyone? So I am ending today's session. Okay, just revise every section and do your homework. Okay, have a good day. Mr. Anand, Mr. Ashok, we will end the session.